tonight we're going to be talking about Bitcoin, where it all started. And I'll just run through the introduction of the Blockchain Centre as well. And welcome. It's good to see some new faces here tonight. Some people may still be wandering in as it comes. That's fine. And I also just want to call attention to the fact that Brave New Coin is actually sponsoring tonight, which is why there have been some drinks provided there. So if you're thirsty, don't hesitate. And also another little piece of useful information, the toilets are just by the little sign over there, just behind there, head to your left if you absolutely need to go. In terms of any dire emergency, you know the front door, there is a back door over there. We haven't had any fires yet, so we should be all right, hopefully. All right, so welcome to the Blockchain Centre. So we are a co-working space built on three major pillars. We have education, which is part of what you're experiencing tonight. So we have a number of different types of events that I'll cover shortly. We're a co-working space, so for $200 a month, people can actually have a hot desk in here. They can come and go as they need and use the Wi-Fi and all the facilities to be able to start their businesses. So there's a number of blockchain-related startups that are operating out of here. And finally, this is a community space. Now I can tell from my personal experience that, you know, wherever I seem to go around Australia where there are people in the blockchain space, they all seem to know or have started or be somehow related to people coming out of this centre. For such a relatively small space, it really is quite a community hub, and all the startups and the businesses in the blockchain space seem to have ties back in through this community. So we've got introductory classes like today, so this is the Crypto Mondays. So every week we actually do a different talk we run through a cycle of them. We also have masterclass or workshops that go into more depth on a specific area. So we've got ones coming up about investing in cryptocurrencies, and we cover ICOs, and we cover a number of different topics in those areas. And there's also community events that happen here. Tonight at 7:30 there's a community event after this one as well about currency design, for instance. You can find out all about what's happening here through Eventbrite and Meetup. Just for my own curiosity, who came here because of Eventbrite tonight? Anyone here from Meetup? Right. Clear winner. Meetup has the day. Okay, so as I said before, right, the co-working space, there it is. And we have a number of key partners that make this space possible. We're a not-for-profit organization, so without sponsorship from a number of the key, from Blockchain Global, this space wouldn't exist. There's Digital X is also very important to us, as is ACX, which is Australia's biggest cryptocurrency exchange. And as I mentioned before, Brave New Coin is the partner that's sponsoring this evening's events. So after our talk, and Brave New Coin is over there, after our talk tonight, there'll be some nibbles served over there as well, courtesy of Brave New Coin. So let's get into the Bitcoin 101 workshop. So it was, picture this, 2008, it's the middle of the GFC as it's known, and there's a big run on the banks, and there's a lot of loss of trust of these third parties that are creating currency and keeping track of what everyone's balances are. And it turns out that their reporting is not always equally transparent or accurate. So someone or some people by the name of Satoshi Nakamoto actually issued a white paper, which is an academic paper, which you can see pasted up on the wall. Looks a little something like this, in which he outlined in 9 pages the concept of a peer-to-peer cryptocurrency. And that's basically why we're here today. A distributed system for transacting that doesn't require any banks or trusted third parties. So there you go. Created and held electronically, and no one controls it. So that's where a lot of the power comes from. That's also where some of the challenges come from, as we'll start to discuss a little bit more later. So one of the beautiful things is that it is decentralized. So rather than listening to a trusted third-party provider like a bank, every single computer that runs the Bitcoin code is part of the network. And every single computer can verify transactions for themselves. It also means that no one can say which transactions are allowed, which transactions are not allowed, how the rules should be changed to change these things. No one can control this system, which is, as it turns out, both a blessing and a curse simultaneously. So, how does it work? Blocks and chains. So what is the blockchain? Well, the challenge, as defined by Satoshi Nakamoto, is that for thousands of people who don't trust each other, that are out on the internet, anonymous strangers, for you to be able to transact with them, you need to have the same shared view of reality. If I'm going to transfer money to some third party, or I'm going to accept money from some third party, I need to know that they have that money, and I need to know that it's legitimate, it hasn't been forged, it hasn't been spent twice in some way, shape, or form. So you need to reach consensus across the whole network. Of course, it can take 5 minutes for information to replicate out across the whole internet. So if you're always waiting to keep up to date with the latest and the last transaction, you'll never get up to speed. So what happens is every 10 minutes, all the transactions are grouped together into blocks. And every 10 minutes of transactions is called a block. And they are digitally signed with a hash, which I'll discuss a little bit more later. And the signature of that block is actually tied to the next block. And that chains them together. So if you change any of the previous transactions, you have to go through and change all the transactions in all the blocks following that, or you have to change all the blocks after that. And that means that that history is written to the blockchain and it cannot be changed. So I'll cover this in more detail and expand it, but that is the core of it. So how do we really make sure that that history can't be changed? It's because of consensus and the proof of work. So every 10 minutes, this block is written, and the whole network has to get consensus about what that means. So what happens is, as each block is written, a computer called a miner actually does some very complicated mathematics to create that signature. And there's a very special signature that the network is looking for that takes the whole network 10 minutes to find. So every computer on the network is looking as hard as they can and finding these signatures, and as soon as they find it, they put their hand up and go, I found it, I found it. Every other computer on the network can then check that signature really quickly and easily and verify that the transactions in that block are valid, that the signature is valid, which means they have done the work they've said they've done. Because you cannot find the correct signature in your first try. To find that signature, you need to try thousands or millions or hundreds of billions of different computations to find the correct signature for that block. And that's why it's proof of work. It's proof that you've done all the work required to find that signature. And ultimately, proving which is the correct version of the Bitcoin blockchain is a matter of finding the latest block that has the proof of work that's the highest total across the entire chain of blocks throughout history. Is everyone following me on this? Is this confusing? Is this clear? Yep. Okay. Beautiful. So now in a visual form, when you request a transaction, you don't make the transaction directly, you shout it out to the whole world. Everyone can see your transaction. It's very much the opposite of the way it happens in the credit card world. In the credit card world, you give your very secret information to one person and you say, please only take as much money as you're supposed to take. And you hope that no one else sees that credit card information. Here, you say, this is the authorization to give exactly this many Bitcoins and put them into this address. You shout that out to the whole world so everyone can see it. The miners, they validate that your transaction's a valid one, that you're not trying to spend money you don't have. Then that verification is then added into the block. The computation or the hash is added onto that block, and once that is found, it is added to the rest of the chain by the whole network, which means every 10 minutes, effectively, there's a voting mechanism, and the blockchain is extended by another block, which means that every computer has access to the history of every transaction that's ever happened. So although there's a lot of talk about anonymity because you're not a person on the blockchain, you are a series of addresses and numbers, there is still transparency in that you can trace every transaction all the way back to the Genesis block or the block where that specific Bitcoin was mined, which we will go into shortly. So, some of the advantages are the speed of transactions. Has anyone here ever sent money internationally and had it arrive where they wanted it to go in under 10 minutes? No, right? Bitcoin, being natively based in the internet, doesn't know legal jurisdictions or national boundaries. So it doesn't matter if you're sending your Bitcoins to someone in this room or you're sending them halfway around the world. We don't rely on a number of different trusted intermediaries to validate the transactions, to wait for their clearing times, to earn money of interest off that money sitting in their accounts for a couple of days before it finally pops out the other end, minus fees and minus conversion rates and whatever else. So every 10 minutes, a new block is mined, new block is added to the blockchain, and that means every 10 minutes your transactions go through. When the network is really busy, it may mean that there's not enough room in this 10-minute block for your transaction to be added to it, and there may be a delay. That may be 10 minutes, that may be an hour, that may be 3 hours, but the bulk of the transactions are being processed every 10 minutes.
Just a quick question.
Yep.
Is that because the lack of miners, so it's taking longer, or?
So there is actually a limit to the size that each block can be. So at the moment, the blockchain is 180, 190 gigabytes or something like that. I don't know exactly off the top of my head, but it's quite big. So if there was no limit to the total size of the blocks, then the blockchain could grow really big. Now, there's been a lot of discussion in people using Bitcoin, whether the block should be bigger or should be smaller, or how this can be sped up. But at the moment, it's set at 1 megabyte per 10 minutes. which means that each computer running a full node is transferring about 8 times that much, because for every block you download, you're uploading it to 8 other people on average. So here's a bit of a picture of the fact that it's not always exactly 10 minutes each block, and the reason for that is that it's a race. Whoever is the first to crack that special signature wins the race, and that's the end of that block. But every 2 weeks, the difficulty of finding that special signature is changed to make sure it stays, on average, a 10-minute block every time. So that's why that, yep. Good question. So that happens roughly once a week, and it's called a soft fork. So if one block comes up and one miner says, this is the block, then say half of the internet hears about that one first, and they go, perfect, we'll start working on the block after that. And another miner somewhere at the other end of the world finds another block, then half the world hears about that block first. They'll start mining on the next block after that. So you've actually forked Bitcoin into 2 different chains now. But what happens is it's almost impossible for the block after that to also be found at identical times. The chances of that are like 1 in 50 trillion, or I'm making up a number here. It's infinitesimal. So after that, what happens that is whoever finds the next block first, that becomes the longest chain. And all the nodes that are working on the wrong block, they will have actually received a copy of the right block in the meantime, but they just put it aside. They're like, okay, that's a parallel one. I'm not working on that because I received this one first. And then as soon as the next block makes the other chain the longest one, they go, okay, this block is now history. We're going to work on this chain here. Everyone's following me? Perfect, thanks. So there's lots and lots of interesting websites out there that are tracking a lot of information. So here's a bunch of charts. This is not 100% up to date, but if you look at the monitor by the door on your way out, it's actually got some more very interesting info that's being updated by every 10th of a second or something about, how much Bitcoin is moving back and forth and all that sort of information. So there's lots and lots of different analysis happening. As you see, the market price there is set at 16,000. It's closer to 9 now. So, ultimately this moves so fast that, it might make more sense to do it live if that's, if you're worried about the price today, look it up, and it's always changing. So, what is mining? Bear with me. So as I mentioned before, mining is the process of calculating a hash or a special signature and a hash function allows you to take any input data and turn that into a special key down the bottom there. So it doesn't matter what data I type in at the top, it will calculate a key which will always be the same length. But it's a one-way function. I can't tell from that hash function what my input data was. And if I change even one letter in that, that is a completely different set of numbers out there. And I cannot predict what that number will become, until I run the SHA-256 hash algorithm over that data. And it's that unpredictability and that one-way functionality of the mathematics under it that allows it to be very hard to do the work, but very easy to validate the work. Kind of, I like to liken it to doing a Sudoku puzzle. So if everyone in this room raced to be the first to do a Sudoku puzzle, then it might take 10 minutes to do, but someone could look at it and in 30 seconds say if there was a mistake in it, right? It's very easy to validate or invalidate once that work is done. Now, after tonight, if you still have more questions, you can also check out YouTube. Here's a decent explainer video that I won't run through tonight. Bitcoin and blockchain technology explained. Now, where can you buy or trade cryptocurrencies? ACX, one of our partners, is actually Australia's largest cryptocurrency exchange. So you can join. How many people here have joined an exchange? Okay, excellent. That's half of you, roughly. So yes, in Australia, the legislation has changed. Exchanges need KYC, know your customer validation. So if you're joining up, for the people who haven't, expect to have to hand over passports, utility bills, all that proof of identification, and it may take them some time to actually run through and validate all that information. At the moment also, there's a lovely game on between exchanges and banks, where some of the exchanges are having difficulty finding banks to give them access to money. So where can you get your Bitcoin wallet? There's a few good ones. So you can make a paper wallet. So this is for what they call cold storage, so the secure offline way of storing. You can go to bitcoinpaperwallet.com, take your computer offline so you're not connected. You can generate your own secret address and print it out on a piece of paper and put that somewhere safe. So you say, paper, that seems so vulnerable. Well, the oldest records we have, thousands and thousands of years old, or, papyrus found in caves, still seems to be legible. So it's actually, a fairly good way of storing information. I know I have USB keys that haven't lasted that long. And the other suggestion is a hardware wallet. So we actually have CoinStop here. However, do you guys have any wallets at the moment?
Not until late May. We have KP, but Trezor and Ledger, everyone worldwide is out of stock.
That was my understanding. So there is a shortage. Now, the reason hardware wallets are really good is because they don't reveal your private key to anyone. Now, in terms of private keys and public keys, you can think of them like your email address and your password. So your public key is like your email address. You can give it out to the whole world. Everyone should know your email address, but no one should know your password. And there are viruses out there that are looking for that password, that private key, and they're out there on phones, they're out there on mobiles, sorry, already said that. They're out there on laptops and desktop computers, but they can't get into the hardware wallets. So if you need to do something through your computer, the hardware wallet will generate the public addresses, but never reveal what your private key is. And yep.
Why would you need a Bitcoin wallet like that if you've already got an account, say, like CoinSpot?
Because the exchanges hold your passwords. So if they're holding your private keys, then they're in control of your money. You're trusting them not to run off to the Bahamas with it, and more importantly, you're trusting them not to get hacked. So last week there was a hack for some $500 million, give or take, in CoinCheck. That was a huge exchange in Japan. Hasn't been Japan doesn't have a good history with exchanges and their security, and it turned out that all that money was sitting on one wallet that was connected to the internet at all times. So that, the fact that they didn't have 90% of it in a paper wallet secured off-site is ridiculous. So if your money's on an exchange, it's not your money. Someone else has control of that, and they can send it and do with it what they like. So you're trusting the exchange. And exchanges can get hacked, just like banks can. And if they've got all your credit card details, then it's just like today, right? Your credit card details can get hacked at any bank account where they're at. So having your own wallet and your own private keys makes it more secure.
Particularly if you are opted to do an exchange, the advice is take the money off the exchange onto a wallet. In order to transact, you then have to move your money, move your currency off your wallet and onto an exchange to get it across.
Correct.
To get it off the side of the box.
Correct. So that's best practice. That's definitely best practice. I would say the amount of money that you leave with an exchange or with any wallet that's connected to the internet should be the same kind of money that you're comfortable walking around with in your pocket. So if you've got, the deposit for your house resting in your Bitcoin holdings, they should probably be in a cold storage wallet somewhere hidden in a safe. They shouldn't be on your mobile phone, and they certainly shouldn't be on an exchange that somebody else has control over it. Yep.
What happens if you lose that hardware wallet?
So when you first set it up, the hardware wallets can give you a special seed phrase. So 24 words that you can then store on a piece of paper somewhere. And then with that seed phrase, you can take any hardware wallet and you can reprogram it to be your hardware wallet.
And your money will still be there.
And your money will still be there. Because the money is not actually in this wallet. The money is at an address on the blockchain. So it's in the cloud. Oh. Okay, that was the screen reminding me to move on to the next slide. So, Bitcoin Wisdom is another cool site to look up for. This is what Bitcoin is trading at on different exchanges in different jurisdictions, as well as some of the Litecoins.
I have a question.
Yep.
So, given that the change continues to grow, I'm not clear on how that isn't a serious efficiency impact, because let's say I've transacted a few years ago.
Yep.
And traffic continues to grow, the chain continues to grow. How do the miners actually then isolate that part of the block to find that as quickly as they once did when the block was smaller? Because it just seems like there's actually more landscape to have to look at and try to find a transaction record.
Well, tracing each of the transactions back to validate them through the blockchain, that does take marginally more time and effort, but the amount of processing power that takes compared to actually generating that hash is insignificant. So if you've got a machine that's powerful enough to be generating these giant hashes, then searching through 200 or 500 gigs of data is not actually the difficult part.
Is there some view about, does the size of the total chain become an issue at some point? I understand that it's on a distributed platform, so it's not in like one spot sitting there saying control.
It's in all the spots.
Yeah.
It's and all the spots have all the data. So it is already, it means that your mobile phone wallets are not full nodes. Full nodes are ones which download the entire blockchain and are processing the entire blockchain. And the reason for that is that means every one of them can validate every transaction for themselves. So the idea is you shouldn't trust anyone. You shouldn't have to trust anyone. And therefore, every node should be able to verify all the transactions for themselves. The mobile phones, because they won't be storing that amount of data, you're actually trusting the rest of the network to have validated those transactions for you. So there's actually a sacrifice happening there already. And the fact that the blocks and the amount of transactions are getting bigger has been a big factor in lots of arguments about how do we speed this up? Do we just make the block size bigger? Now, if you look at Bitcoin that's currently doing about 7 transactions a second, and you look at Visa that's doing 5,000 or 6,000 transactions a second, if you just multiply the block size by 1,000, and you go, boom, we issue 1 gigabyte block every 10 minutes, then all of a sudden you're uploading and downloading 8 gigabytes of data every 10 minutes, right? You can't scale that way. You can't scale that way, and just like the internet, the application's growing as soon as it became possible, and every time you add more bandwidth, somebody thinks of a better idea to use more of it. As soon as you have 7,000 transactions a second, somebody will start trying to pay people's wages in increments of 1 minute, and will require 7 billion transactions a second. What do you do then? Anyway, another one that I like to have a look at is cryptalization. Now, one of the fun things about this site is that it would show you the cryptocurrency space as a whole against the S&P 500. What's remarkable about this is that they surpassed the whole of the S&P, which means that non-productive assets outperformed every single productive asset and share in the marketplace, which tells you just how speculative a lot of this value is. And I say that being a firm believer in the fact that the underlying technology is quite remarkable and allows us to do things that were never before possible. How do I get a Bitcoin? Well, about half of you already know. So here's one way of doing it. You get yourself a wallet. You make sure that you hit request, and it pops up your QR code. So then you make sure that the person who's sending you your Bitcoins can scan that QR code and send it to the correct address. If you're typing in your public key address, your email address, there's a lot of opportunities for error. The QR code is the simplest and easiest way to date, really. How fast can cryptocurrency be transferred? So, as I said before, Bitcoin has blocks every 10 minutes, so that's roughly how long it takes to transfer your cryptocurrency anywhere, regardless of whether it's going to the person sitting in the seat next to you or whether it's going halfway around the world. Why censorship resistance? So this is an interesting one, but the idea behind having it running on an open network is to be completely resistant to censorship, so that there's no single person deciding what is a good transaction or a bad transaction. There's only nodes that can decide whether it's valid, whether the money was there to be sent or not to be sent, but there's no restrictions on Muslims sending money, no restrictions on women sending money, no restrictions on children sending money, no restrictions on what you can buy, what you can... Yeah, so it's a very, very libertarian ideals that are behind that. And that's why the censorship resistance, that's why a lot of the choices were made in how Bitcoin was designed in terms of that decentralization to make sure that no entity was in control of it. Because of course, in our world, we have banks in control of the financial system, and the way that the regulation is going, there are 2.1 billion households that don't have access to banking services. And because they don't have access to banking services, they don't have access to any of the transaction possibilities that we take for granted.
So they didn't go to Bitcoin, you mean?
They then go to Bitcoin. Well, here, one of the exiles of the banking sector was WikiLeaks. So after WikiLeaks shared some information that certain US governments didn't want out there, the banks collectively, after a little bit of pressure, decided not to grant banking services. So WikiLeaks bank accounts were frozen basically overnight. And there was a little bit of a delay, a little bit of toing and froing, but they started allowing and accepting donations in Bitcoin to keep WikiLeaks open. Now, ironically, Bitcoin has gone up by about 50,000%. Well, actually now it's gone down again, so 20,000% since then. So, yeah, Julian Assange actually tweeted a thank you to the US government for getting him into Bitcoin early. So WikiLeaks is well funded now. It's, it shouldn't be taken offline anytime soon, but if it had to rely on just the monopoly bank currency, it would have been dead already. So, where do you go for industry news and market data? So, great source, Brave New Coin. Again, these are the guys that are sponsoring the food and the drinks tonight, so look out for that, as well as for their weekly newsletter. So sign up for the week in Bitcoin, and you'll get all the crucial information. Also, you know, check out our meetup groups, and you'll find out all the events that we've got on here. And I think you guys already know how to find us there, since you managed to find us tonight. And follow us on whatever your favorite social media channel is. So we have all of these. We have Twitter, we're on LinkedIn, we're on WhatsApp, we're on Telegram, and we're on Facebook. So, yeah, find us where you like to hang out. All right, any more questions? There we go, there we go.
Addressing the elephant in the room, and some of us who actually own Bitcoin are probably shitting bricks. But then, and okay, a lot of people are saying it's only a temporary down phase and it will go up. A lot of people are saying the million mark, I don't know. What are your thoughts? And I know they would probably come with a caveat, but...
Yep, well, here's the caveat, right? None of this is financial advice. But yes, for the past 4 years or 5 years, every year the January, February time period is a really bad period for cryptocurrencies. So it tends to be a fairly slow period for markets in general, and we have one situation that's affecting Bitcoin especially is low liquidity. So, there are close to 17 million Bitcoins today. There will only ever be 21 million. So there are not that many. It's estimated that 23% of Bitcoins have actually been lost because people have forgotten their private keys. So then you're actually looking at 14 million or so. And those people who have seen their Bitcoins go from being worth $20,000 to now being worth $10,000, they're not selling them, right? They're not selling them, they're just holding on tight no matter how low it goes. So what you've got is you've got a very illiquid market with not that many people in it, because at the moment you are still all very early adopters of this technology, right? So they're difficult to use for most people. So it's the early adopters that don't mind taking the risks on something uncertain, that are technically savvy enough to figure out how to buy or mine or accept a transaction in the first place, that are actually in this space. So it's a small space where people are holding on, hoping for that $1 million price at the end of it, which means that if you're actually looking to sell, that can become difficult. And especially at the beginning of the year, when the markets tend to be a little bit sluggish anyway, it's not a great time to sell. What will the price be? I don't know, but this is a pattern that's been seen for the past several years. I've got a few more questions coming. This gentleman first.
Bitcoin versus Ethereum.
Yep.
Bitcoin on Bitcoin blockchain.
Mm-hmm.
Ethereum. All the ICOs appear to be, a lot of the ICOs appear to be designed on the Ethereum blockchain. So why is Bitcoin still of interest to people? And when will Ethereum overtake Bitcoin?
So they're quite different. So Bitcoin is very simple and therefore very secure. Ethereum is just the question, in case not everybody was able to hear it. The difference between Bitcoin and Ethereum, so a lot of ICOs are happening on Ethereum. When, if ever, will Ethereum overtake Bitcoin? So decent summary? Yep. So Ethereum is a distributed computing platform. So Bitcoin is very simple. It is a way to transfer Bitcoins to each other, although you can piggyback other data in your transactions. Ethereum said, what if that other data could be computer code, smart contracts? And all of a sudden that means that Ethereum can be extended to do almost anything you can imagine, even though it has a cost to it, because every computer on that network runs every single piece of code. And what that means is you've got 12-year-olds that can write you smart code that actually sends money around the place and can lose it, and there's an infinite surface area for people to attack. So although it's incredibly multifunctional, it also allows a lot more vulnerabilities to seep in, and therefore they're fundamentally different in what they do. One of the things that Ethereum does well is it allows for the simple creation of what's called ERC20 tokens, which most of these ICOs are. But they are very simple tokens that I will be discussing some of the limitations of in the next seminar tonight, the meetup after we have snacks. But yes, so they're fundamentally different, and when will they overtake? I would say apples and oranges. When will apples finally win the battle? Right. You had a question there in the back?
Yeah, it's not so much a question, it's just something I find hilarious about the whole thing.
Yep.
Is that you mentioned censorship and government control and all that kind of stuff. The backbone of the whole thing, being the SHA-256 algorithm, was actually developed by the NSA.
Yep. Are you insinuating that there might be a backdoor there for the NSA? No. Look, I think the governments wouldn't be using this if it was known that there were vulnerabilities in it. I certainly, if I was the NSA, I wouldn't be using my one shot at a backdoor to do something funny with Bitcoin when there are other governments that are securing their nuclear launch codes with the same technology. And over there was a, yep.
Is there a good chance that Bitcoin may never really increase much more because other blockchains out there will be adopted or be used, other ICOs will be more popular, or other services like the music industry and all that?
So I definitely, one of the main things I do see is forking of the Bitcoin blockchain. And what that means is at certain points there's been disagreement about how to scale, right? How do we allow more than 5 or 6 or 7 transactions a second? How do we actually ramp up and do 1,000 transactions a second? And there's a lot of different views on this, but what it has meant is that a group of people basically separated themselves off and went, we're going to do Bitcoin Cash. And there's a bunch of others now. Bitcoin Cash is the second major one. But what that means is that effectively the whole network has split in two. So you have 2 smaller networks, and with that it sort of divides the value somewhat between the 2 of them. And you'll find that they sort of contradict each other in how the prices move a lot of the time. Because money will go from Bitcoin to Bitcoin Cash, and then back to Bitcoin, and then to Bitcoin Gold, and Diamond, and Candy, and these others. So that is one way that there's a dilution of the Bitcoin value. And also, Bitcoin it holds a particular niche. It's trying to be gold. It's trying to be gold. It's good at international transactions for large values because it looks like it'll have large transaction fees for the foreseeable future. And there's a very there's a specific limited quantity that doesn't respond to the needs of the market. And that's why you get these, divisible units as well.
I read the other day something about an ICO that's backs itself against natural gold.
Mm-hmm.
Is that true? Does that make it a safer one?
So that's something in the gold markets that's been a big issue for a long time. So long before cryptocurrencies, basically the reason paper money exists is because people started issuing gold-backed paper notes, right? You would deposit your gold at a bank, and they would give you a note saying, you have a pound of gold with us. And then they started issuing those in standard denominations, and then they started figuring out that people were actually trading the notes to each other, but they weren't actually coming to collect the gold. And that's when they figured out they could issue more notes than they had gold for, and that's how paper money was born. So paper money was born out of the fact that you can't trust people to have the gold that backs the currency. So yes, it makes it more secure, but in the gold space, very much, if you don't own the physical gold, you don't own the physical gold. So it's very much, it remains to be seen whether there is physical gold backing that, or whether there is, it's another tether. And that's a bit of an inside joke. There's a currency that's supposed to have US dollars for every coin issued, but it's looking like people are putting Bitcoin in there and saying that's equivalent to so many US dollars, and therefore they're issuing more tethers and buying more Bitcoin with it, and doing all sorts of things with the market price. But whether there are actually US dollars if somebody wants it, I would suggest no. You had a question, sir?
No, yeah, that's what I was asking about the USDT. Is that trustworthy fact, or is it?
So I think I've just given my answer. Yeah.
You just mentioned Bitcoin Cash.
Yes.
Bitcoin Cash is a separate currency on its own blockchain, or does it share a blockchain with Bitcoin?
So it is its own blockchain, but it's forked from Bitcoin originally. Yeah.
So on that part, how do they actually fork Bitcoin? So when people say we don't like where Bitcoin is or what it's doing, we're going to fork or separate. Since Bitcoin is already on the public sphere, do they basically just plagiarize what Bitcoin is and just add a little bit and say this is what we're going to now do? Or do they just and how do they do that? Do they take the nodes with them? That makes it better. How did that work?
Yep.
You mentioned there's a fork happening, or there's a fork. What does that
Okay, so there's different ways. So I don't think they're here tonight, but one example is there were 2 guys here the other day, And they've actually taken the Bitcoin code and they've started messing around with it. It's a different amount of coins that they're issuing, and 20% of all the mining proceeds. So what I didn't mention is the first transaction in every block, the miner rewards themselves with Bitcoins. And that means every 10-minute block, there are new Bitcoins being issued from nothing. And it started off at 50 for every 10 minutes. And every 4 years, it's halving. So today, it's actually 12.5 Bitcoins for every block. So that's sort of the issuance mechanism in Bitcoin, right? Now, what they've done is they've changed that code. The formula is a little bit different. And they've said 20% of the value that's mined actually goes to charity. So they called it Veggie Coin. And the idea is that 20% goes to animal charities. So you can now download the Veggie Coin code and run that. So that's one way of doing it. The other way is when there's a running system like Bitcoin and you get on the boards and you say, okay, I've got a proposed alternative. Everyone start from today, start running this piece of code, and basically halfway through from block number whatever, start running transactions like this and start accepting higher or lower sizes of blocks, or do something different in the way you're validating things, or switch to another algorithm like proof of stake, or we cover those in the Ethereum workshop. That's a little more, something else. But those are sort of the two major ways. So either you take a copy, modify the code, and start your own from a new Genesis block, or you agree with a number of people on an already existing chain to go and start processing your transactions in a different way and fork it halfway through its life cycle. Did that make sense?
Now, when you said some of those people, are they institutions, are they billionaires, millionaires? What are those people to just create a massive move to a new direction when it is a public thing that everyone's using?
Yes, all of the above. Who knows? So basically one of the things that you do notice is there has been centralization. So it was designed for everyone to run their own node. And then the more the price would go up, the more people would put computing power on the network, right? And it started off being everyone would use their CPU that's optimized to do everything, but not optimized for Bitcoin mathematics specifically. And then somebody thought, but if I could run this on my graphics processing unit, it is built just to do maths, so it would be 1,000 times faster. And all of a sudden, Bitcoin basically just rejuvenated the graphics card industry and sold out the entire production capacity of graphics card for months on end. And what happened then is somebody thought, well, if graphics cards are this good, what would happen if we built chips especially just to do this one thing? So they built what's called ASICs, which are application-specific integrated circuits. And so they started building those, which are 1,000 times faster than graphics processing units. And that's basically as far as technology has gotten. So we will not get another leap of 1,000 times. But that meant the fast increase in processing speeds meant that if you had hardware that was 2 months old, you had lost your 2 most profitable months of mining. So you basically had to sit outside of the factory, get the rigs directly so they weren't, sitting on a ship for 3 months. And that led to a temporary concentration where there's cheap electricity and you're close to manufacturing. So that meant China and South Korea, effectively. And now that is no longer quite as much the case. So there was a bit of a centralization that happened at that space. Did that answer your question? Yeah, okay. I think you're the only one asking right now.
I was going to ask, if you don't...
No.
I was going to ask, if you're going into the mining side of
this cryptocurrency world
Yep.
rather than investing or buying or doing that. And there's things called investor pools and all that. How do you actually go about doing that? Have you come across that sort of area?
Go into mining today.
Not personally mining it,
Yeah.
but being part of a pool that has the hardware things.
Okay, yeah, so you can either go to a trusted third party and say, if I give you money, you will assign a certain amount of processing power. Generally, they charge you a daily fee for hosting that processing power and paying for the electricity. And that basically means that they have the guaranteed return, and you are hoping that the money they return will be worth it. And also, they generally give you that money, they pay you that money in US dollars and not actually the Bitcoins. And of course, if you want to get into the space, you probably think that Bitcoins are going to be worth $1 trillion or something outrageous, and you want to be taking part in that. So the other option is to buy yourself a piece of hardware to actually start mining, and then joining up with a mining pool, which means you're basically lumped together with thousands of other people. And if anyone in those thousands of people actually is the first to get that mathematics done, you get a portion, you all share a portion. So your rewards are a lot lower, but they're a lot more consistent.
It's a lottery ticket consortium.
It basically is. Like if you were to try and rationalize and do it in this room with actual human beings and say, we're going to decide the consensus on what is the universal view by everyone racing to complete a Sudoku puzzle, and the first person to do it, that's whose view of the truth is the truth for that moment, it wouldn't really make sense, right? If I think consensus, I think everybody shouts out what they think, and then you start negotiating some sort of middle ground. So the first one gets paid, and the other nodes, they actually see that information, and they actually independently run through the transactions to make sure there's nothing false in there. And I had a question back here. Oh.
So it never happens that someone that has a really low budget mining gets first the code and gets the 12.5
Bitcoin. So it's
Yeah.
possible. The chance
really
is
low chance.
the chance is greater than zero. You could do it on paper. There is a chance that you could, actually work it out on paper, and the first one you try is actually the right one. But I wouldn't spend my time doing that. Ah,
Because they're million acid chips and they're doing 17.5 terahash a second. You go from
dum, dum, dum. So that's what you're competing against if you're doing it by hand. In Iceland, apparently, they're using the excess heat to heat cities. Very convenient. So yeah, the whole network now is using like as much electricity as Germany or something ridiculous like that. I'll go over there first.
On the basis that we're sitting around the $10,000 market at the moment,
Yep.
you made the comment that nobody's selling.
Yep.
You're suggesting there's a hard core of people who have just got their Bitcoin and aren't going to go.
If you're paying $1 million for the electricity cost every week to run a mining farm like this, then you will be selling in order to cover your electricity costs, but you're not going to get out of Bitcoin. So there is a floor to how far it can drop. Had a question behind you.
How centralized is the mining?
It sort of, I think the biggest pool is like 20-something%, but I haven't looked today. Yep.
So I'm going to make a comment. I think discussion around blockchain and Bitcoin, I mean, there seems to be some conflation between the technology creating different possibilities,
Yeah.
which then I think sometimes gets conflated with egalitarian behavior. And I just want to point out that, you know, to me it's in the room. So most of the questions I'm hearing are largely about how do I'm looking for certainty about the underlying value of this currency, what's the price, how do I make more money? And what you're already saying is a hub and spoke style power distribution, which is the effect that the banks came from and so on. And what happens if you take the existing rule sets out, you basically make the Wild West again. So I'm not saying that's good or bad. I also want to make the comment that right now it seems like the underlying value behind this is still actual US dollars. And it's probably important to understand the linkage between the way China funds the US and props up the value by buying all the US bonds to keep the interest rates down so they can, it's an exchange rate play, and there's a flow system in some place, but it's effectively bankrupt. So if you actually look at the US balance sheet and you said let's cash all around, the US is out of business. So just be aware that all of this is set up on perception, all of it. So that there isn't any certainty in any of it. Sorry.
Yeah.
So have fun.
Just for the microphone, great comment. Basically, that the value that everyone is perceiving in Bitcoin is actually based on how much one's worth in US dollars. And if you actually look at the value of US dollars being somewhat of an illusion based on their access to oil and violence, but ultimately China is underwriting that value by offering to sell them products and actual things of value in exchange for these dollars. If China were to collect their debts tomorrow, then the price of Bitcoin in US dollars would mean nothing. I'm kind of short-circuiting some of that, but that's...
You're meaning cryptocurrency full stop, aren't you? Not just Bitcoin.
I'm meaning 98% of cryptocurrencies. Look, in this whole space, we are where the internet was at in 1996, when there was money going to everyone with a .com after their name, even though they didn't necessarily have proven financial revenue streams. And then in 2000, 90-something% of them just wiped out. That's what I do expect to happen to all these cryptocurrencies, but there will be one or two that fundamentally change the way industries are structured. We had a question over here.
Well, it's more a comment. I see it as a paradigm shift. We're changing from physical money and it being centralised to decentralised. You can actually trade in bonds, Bitcoin, without having to have US dollars. It's starting to shift away from actual physical money now. It'll take a while, but I think that's the things will happen through the internet without touching banks or anything else.
Yep.
I start out with
So it's a paradigm shift that we're switching from trusted intermediaries and third parties and moving on to peer-to-peer digital money and digital organizing. One thing that I will add on to that is that when you move the payment infrastructure and you make it digital, you can start to perform symbolic operations on it directly. So when you can take the deed to a house or your money and you can do with it anything that you can do in software code, you start to have a lot more possibilities, right? A lot of things that might have been possible once upon a time, such as common property that is managed by multiple parties and not necessarily owned by any single one of them, becomes a lot easier when you have that peer-to-peer distributed model underlying it, rather than always relying on that central hub.
There's a lot of potential, you talk about the potential,
Yeah.
property, money, etc. Here and now today, what are some of the big scenarios that are actually using Bitcoin as a currency?
Speculation is a really big scenario. I will also say ICOs are actually a new financial product that wasn't possible before. So that is something else where early stage startups can raise a large amount of money and not give up equity in their business, based on the idea of a data market at the back end. So a distributed, decentralized mode of operations. But in terms of what's on the ground, so most of these ICOs happened in 2017, and they've gone away and they're squirreling away actually building the infrastructure now. So there are a number of working things such as Arcade City, which is a decentralized Uber. There is Steemit, which is a decentralized Facebook. It's not as pretty or as polished anywhere, as Facebook, but it's there and it's working, and it's processing a lot of transactions. In terms of Bitcoins themselves, you can look at the screen later and see in the last 5 minutes there have been $10 million worth of transactions. I suspect a fairly large portion of that is speculation and buying and selling of Bitcoins for making a profit, but there is definitely there is overseas remittances that are part of that, and other random purchases. I don't know what proportion of it, so I wouldn't speculate on that. We can continue with more questions out by the snack bar. Everyone, please help yourself. And for anyone who's interested, I continue with a currency design workshop at 7:30 here.